What's up? We are live, baby. So, market is moving. Obviously, the context right now is kind of single bar. I'm going to say soft bear channel. An attempt at a trend turns into a soft bear channel. Now, quick update. Most of you guys know last week I had a massive power supply failure. So I decided, you know what? We're waiting on the supply chain anyway. I'm going to go ahead and renovate the office space. So I'm in the middle of doing so. Most of you guys already know this. I've been updating the Discord, the Tomb, all along the way. But obviously, the schedule is affected by that. So I'm going to be back on a regular streaming schedule very shortly. In the meantime, I'm surrounded by shit as we get this thing all squared away for 2026, man. In the meantime, let's see what we can get done here. So, we are 450 out from the close of Big Bar 33. Now, you would look at this, at least I would look at this and think, cover up ATR for a second and price. What's the ATR? I'd say it's about 12. Well, ATR is 52, which is kind of nuts. So, let's see what we can get. Right now, I'm kind of looking for any reasonable reason to get short. Let's see what we got, man. Come on, 33. 4 minutes out. Good morning, guys. How we doing? All right. Again, I'm looking for any reasonable reason to get short. To me right now, again, context, attempt at a trend into a very soft, basically single bar soft bear channel, but ATR is high, 55. If it turns into a single bar trading range, all of a sudden I lose interest. Okay, but as it currently sits, I am intrigued with ATR being this high as well, and there still being a very clear fade bias here in the market. What we don't want to happen is this. We don't want this to become more of an argument. That would not be tremendous. All right. 90 seconds. You know, I gotta tell you, it has me intrigued. Yeah. You know, by the way, this can be deceiving. The price action, you got to remember ATR is 56. Okay, so when ATR is that high, make sure you're sized appropriately. Usually meaning down a little bit. We'll be trading real big. Let's pop on over. See if we can get something done here. 30 seconds out. Oh, you bulls. Bulls. I gotta tell you, I'm a little concerned that we end up just getting pinned at 25. If anything, I'd love to maintain this. If we could even widen it out a little bit, that would be even better. But if we end up getting pinned at 25, you better, you know what this is going to turn into, right? If we do that, it's just going to turn into this. By the way, how many of you guys shorted to close a 14 into the open of 15? I know you did. I know you did it. Beautiful ram trade, by the way, if you could get a fill. All right, we're halfway through bar 34. Let's see. You know, again, I got to tell you, I'm a little concerned that this turns into just a single bar sideways range. In the meantime, I do want to see if we can do something. Now, typically, when the market comes down around 25, either it's going to break it hard and then pick a direction and go. Sometimes it's a fake out. Sometimes it's an honest-to-God break. And then other times, you know, of course, you're going to get stuck to it. I don't know if you guys remember this. Maybe, shit, I don't know. I'm guessing 6 months ago, we were dealing with, what was it, 20K back then? I forget. I think it was 20K. We kept getting stuck to it for like weeks. It was actually pretty frustrating. But eventually, finally, when you break away from there and pick a direction and go, you typically end up getting a better market. But I gotta tell you, man, I am very happy with this ATR. Look at that pop, huh? It's not a good thing. That supports this. I imagine the bears are gonna try to step in and take you right back into that range. Let's see if they can. know, right now here, quickest path to a setup. Yeah, you know, it's tough because coming out of this big bear move, ideally I would be looking for 3 consecutive bull bodies. Now, if we had 2, they better be damn clean. We better be at least closing outside of the wick high of 21, though. Had we had, I mean, if we get, let's say, and that's not a very clean bar on 34. Well, let's say 35 pops and closes like right here at, you know, 25, 125. All of a sudden, the risk of this is really high, which means I'm waiting for 36 anyway. But I gotta tell you, when the market's doing this, I'd much rather have ATR be 53 than have it be 13. Because with a high ATR like this, the probability of getting out of here, picking a direction, and moving is much higher than with a really low volatility. So we're good. Gotta be patient. Wait it out. I'm all bulls or bears, man. I don't care at this point. Give us something to work with, baby. I'll take either direction. I don't mind. Either way at this point would take 2 bars. Now that the single bar sideways trading range is kind of locked in. You know, again, I keep ranting at the tomb. I think they're sick of hearing me talk about it. The quickest way to stop losing money is to stop trading single bar sideways trading ranges. Because most of you guys are probably taking a lot of good trades, at least a reasonable percentage of you are probably taking good stuff, if you're following the methodology. But you're drowning it out with garbage. And then you think you just suck. Because you're like, I'm not making money. But if you separate it out, your good trades, you might actually be profitable. You're just drowning it with bad stuff that's low probability. Not necessarily low probability, but negative expected value. And then you lump it all together in your head and you just say, I suck. That's not fair. That's not a fair assessment. You're trading well, you're just taking a lot of garbage also. Alright, 2 minutes out here. And then we get big 36. There you go, bulls. There we go. Pop a sub, give us a nice close here. And then a big bull bar on 36. That would be beautiful. You know, also, I'm curious. You guys know the earliest time I'll ever take a trade is the close of bar 2 if they're really clean. Now, 1 and 2 were not extraordinarily clean, but they were, you know, they were acceptable. Did anybody short the close of 2 into the open of 3? ATR at that time was what? Yeah, you know what? That's an outsized bar compared to, you know, this is one of those nuances of RAM. because ATR comes into play a lot. Off the open, the ATR is going to be artificially low. Now, you need to understand that it's artificially low. Okay, but still, bar 2, 1 and 2 being, 1 being a little sloppy, kind of a lot of wick up top here. By the way, we're watching the close of 35. We'll go into the open of 36 and see what we get. We get another clean bull body, another 35. All of a sudden, I'm getting long. 1's a little sloppy. 2's really clean. 2 is more than double the size of the ATR. Now, the ATR at that time is artificially low because we're looking back 10 5-minute bars. And 8 of those at that time are pre-market bars, which are going to be, again, kind of, well, I suppose not artificially, but the volume, the range is just going to be a little bit lower typically. And that creates an artificially low ATR for the first 5 or 10 bars of the New York session. So, would I yell at you if you shorted the close of 2 into the open of 3? I wouldn't yell at you. You would have made some money, but long term, is that best practice? Yeah, we're splitting hairs, but I'd say no, just because 1 was a little sloppy and we have kind of an outsized bar. Even if you add a little to the ATR to say, yeah, it's a little outsized, bump that a little, give it a little leeway, it's still pretty outsized. But if 1 was cleaner, I would yell at you even less. All right, 36. The numbers here on the bottom of the bars, it's just counting the bars since the New York session opened. While everybody fumbles and says, the 6:45 bar. What time zone? Pacific. Okay, where I live, is there daylight savings time? It's just a pain in the ass. Just number the bars. Then we can all talk about it no matter where you live. Three minutes out. Let's see if the Bulls can step in here. $90 seconds. Come on, Bulls! Give us something we can work with here. Give us a little pop. You know they're going to try to... The Bears are going to try to take it right back into that trading range. All right, here comes the open of 37. And we're right back in that range, aren't we? It'd be really nice if we could see the bulls pull this away so we don't get stuck to 25K. Getting stuck to 25K is a surefire way to kind of kill off some opportunity. But you know what? If the Bears want to take it down and break us through and go deeper into the 24s, I'll take it, man. Let's get rid of this. I think we can now. Rain, what's up, big dog? How we doing? Yeah, backup PS. You know, it's funny. Again, if you're unaware, last week on my main PC, the power supply totally failed. It just failed one morning. Which I, can't expect everything to last forever. But I was talking to my wife and she's like, well, do you have a backup? And I'm like, okay. Let me just... If you want to start having backups for everything, let me just have an entirely second PC. Because what am I supposed to do? Have a graphics card, a second of the same laying around, a second processor, a second power supply, a second set of RAM, a second set of everything. It's like, let's just have 3 PCs with all the same stuff on all of them at that point. You know, with this logic, you would think, I don't want to complain too much because the power supply, actually, I ordered it directly from the manufacturer. It came way quicker than expected. They said it was going to take a week and a half. It came in like 4 days. But still, I feel like you should be able to order, overnight. All right, calm down. I have 4 PCs. But only one of them is really set up for all this. With all the, I can trade on any of them, but... It's like, at some point, maybe you should just have 5 PCs, all set up exactly the same. Sounds ridiculous, but I'm kind of not joking in a way, at least 2. Or, to fix all these problems, you should be able to just overnight any part. You would think the manufacturers would have this figured out. But I guess you're getting kind of niche there. Maybe there's no money in doing that. I don't know, man. I'm on 37. Give us a pop, baby. Come on, bulls! ATR holding up. We're at 50 on the ATR. Gotta love it. Oh, you know, on the bright side, ATR is holding up, man. We're sitting at 51.5. All it takes here is 2 bars. And I'm in a trade. But right here on 38, you know, leave this. This is algo and degenerate territory. Right here. 50 seconds. There you go. Let's get this widened up. 10 seconds. Do not glue us to 25K. Let's get down through 24,980 and keep pushing. Just a little hesitation here at 25,000. And let's tank. Let's take the rest of the day, tank this baby to 24,000. We'll take 25 trades to the short side. What do you guys say? Let's do it. Yeah, that's the rule with buying RAM, computer RAM, not wrench action method RAM. The rule is whatever you think you need, buy better and by double. You'd rather have it and not need it than have it slowing you down. Of course, I'm not really in a position to talk about PCs right now, am I? I'll tell you what, let's do a poll here in the chat. I want to take bets. You will type your answer in the chat. Is this market going to fade? There's going to be 3 options, okay? Ready? Is the market going to turn into kind of like this? Call that bear channel. Are we going to get stuck to 25K? Call that stuck, or 25K, or flat. Or is this the start of this? Kind of a soft bull channel that picks up steam and it heads back toward the wick high of like 11 or 6. Honestly, when you're in this situation, you can see it any which way, which is the reason it's time to hold off and not hit something until it presents itself. Man, whole bunch you on the bull side? Really? That's interesting. So you guys think that the wick low of 31 is the low of day? At least is that my assumption of what you guys are thinking? That's really interesting. I gotta tell you, I'd prefer for this thing to just fade. But it's not up to me. Man, we got about 80% to the bull side. All right. All right, let's see what happens. Let's see what happens. Come on, 39. Give us a fade. There you go, Bears. All right, now 40 can take this thing through and close us reasonably. I'm not talking like 24,980. But if the Bears can close us reasonably beneath the wick low of 31, I've got a big old wrapped with a bow present for the Bears called a stop limit sell. But it better be clean if I'm going to short in the middle of this. Oh, never adjust it how you... In the middle of a big range. It better be clean, so come on 40. $350 out. Question, took that as a ram candle. They're talking about they shorted the close of 39 as a ram bar toward the bottom of the range. You know, listen, I know exactly why you're looking at that. For me, personally, and by the way, you taking that, I know that you're seeing things the right way. Okay, but for me, the way that I assess that context is that 39 is very close to the low of the range. It's right at 25K. We've already broken 25K, so the stop effect is effectively gone. The stop hunting effect below 25K is basically gone. Okay, so for me, I wait for 40. But again, if you took 39, you shorted the rollover of 39. Again, I think you're seeing things the right way. It's just, again, for me, context-wise, I gotta wait for 40, which is what I'm doing right now. So 2 minutes out, let's see what we get. Come on for it. Take this thing lower, Bears. Let's do it to them. Well, you know what? We better hop on over to the execution screen here. Bears, bunch of babies. All right, we might be getting glued to 25K. I'm not going to put that out there, though, because that's what we do not want to happen. ATR holding up. It's at 46, fading a tad, but 46 is still more than doable. In a range of this size, would you still be happy to go long on a small bull body, or do we wait for continuation setups in a larger range to enter? For me to go long, I would be looking for a continuation setup, just because we really haven't broken the context of, you know, you kind of look from bar 14, that whole context. There's still a pretty strong argument that this might just fade through 24,980 and still just be a big soft bear channel. So I'm not, you know, super interested in jumping the gun on that, but if you were scalping hard, like you're really focused on just scalping, you know, I wouldn't be against what you're saying. But, I mean, for me, if I'm getting long, it better be 2, more ideally 3 clean bull bodies with a regular continuation, clearing the wick high of probably bar 20 at a minimum, or I guess 21. So right now, there's again a few ways you could look at this. If we can break the wick low of 40, all of a sudden this is the look. Well, I guess break the wick low of 31, that's the look. But at the same time, remember, if you can draw this and have it be super reasonable, I like to err on the side of, let me look at the one that's more dangerous to what I'm doing, which in this case is a flat trading range. Big sideways trading range. All right, I'll be right back. 2 minutes. Just grabbing coffee. What's up? Welcome back. Alright, what do we think? Big bar 41. Closing as a doji. See? Bar 40, same deal. ATR, again, still holding up, man. We're at damn near 47. Which you love to see it. With ATR that high, you don't like to see it go to waste in a little sideways range. So let's break out, bulls! Take this thing higher. Or bears, man. Whoever wants to do it to him, let's have it done. Oh, man. Alright, well, we know that range is there, so let's get rid of that. To invite the market to give us something. Alright. 35 seconds out. 43 will close up. 44 will open up. Let's see if a whole bunch of you guys were premature but correct in saying that you think this is turning into a soft bull channel. Let's see. All right, 44, what you got for us? Let's get it done here. Reasonable close coming here out of 43. All right, 44. Give us a pop! Let's close above the wick high of, I don't know, let's say 37, ideally 24. Start closing above the wick high at 21. All of a sudden, this bar is getting pretty damn big. And that would be pretty outsized. Question, you think red folder news, like inflation numbers, CPI, coming out tomorrow, for example, has a limiting effect on bigger price action moves? Yeah, some people think the market will, quote-unquote, wait for the news. So, a lot of times what you'll see is like power hour time, the day before a big red folder news event. Things will be a little bit slow, a little more timid, but that's not a rule. Okay, you just sometimes tend to see that. So, the way, and I get these questions a lot, like, how do you trade the day after? I just went over this in the tomb, actually. How do you deal with the day after, like a big, maybe unexpected news event, coming into a news event? The day of, let's say you get CPI in the morning, and then the rest of the day, how do you deal with it? Look, it's all solved by just doing your job. Just do what we're already doing. Anything you need to know, you will see in the price action. Now, I'm not trading the news event itself. That's 50-50. Everybody knows that news is 50-50 at this point, unless you have some kind of inside info, which, of course we don't. So it's 50-50. It's just the way it is. It's a gamble. That's okay. If you want to take that gamble, be my guest, but you're not acting like a trader who wants to win. You're acting like a trader who wants to treat the market like a fun time, which, again, you're a grown-up. Do whatever you want. I'm not going to do that. If we get CPI news and it causes the market to go into a tremendous trend, you should know that we got the news. But I mean, let's be honest, you would have seen the trend regardless just by going straight to the source, which is the whole point of RAM, is to go straight to the source, the price action. All the other stuff takes a back seat. Context and then price action setups that match the current context. That's all we're doing here. It's really not that complicated. It's just hard. All right, 2 minutes out. Come on, 44. What you got? At 25. Come on, 44. What's a pop? By the way, I know a bunch of you guys hit it, but if you missed it, the Apex 90% off deal is now kaput. It's over. But they're now 80% off, which is still a pretty damn good deal. Code BIG, baby. B-I-G. Go hit that up. Come on, 44. 55 seconds out. 15 seconds. Oh, you bulls. You insecure bunch. All right, we kept that as a reasonably small bear body, so let's watch 45. That's the wrong way, bulls. Now again, do your best. We haven't forgotten that the context here is this. This is the context. You gotta be careful. It's really easy to start looking at this kind of stuff. This is a big deal. Okay, this takes some time to learn what I'm about to say right now. It's really easy to look at that and start saying, okay, this is turning into a soft bull channel, right? We could have also said the same thing here. You could have said the same thing here. And it was all just a big trading range. Honestly, it's not so easy to not forget the context. But always just take kind of a stutter step, look back and say, am I forgetting the very obvious, clear context? And if the answer is no, but we have a setup that's worth taking, then you take the trade. You know, by the way, we had a huge, tremendous conversation in the tomb last night on the live training. We did an hour on dopamine. Yesterday was a really good example. You guys notice how I got off stream yesterday? And immediately, within like 15 minutes or something, we got a really, really high quality setup. So we had a long conversation about delayed gratification and dopamine. I like talking about that stuff because I think that's a really big deal. By the way, I was very clear, I'm not the completely detox the rest of your life from dopamine. That's not me, man. I mean, who wants to live that life? That's not... If someone gave you 100 million tomorrow, or 1 billion tomorrow, and said you can never feel dopamine again, that sucks. I'm not really interested. The point is, you just got to figure out how to retrain your brain, which sounds more complicated than it really is. It just takes a week of brute force to get that dopamine with a different trigger. The trigger being doing the right thing in an environment where most people can't, according to the methodology, rather than taking a gambly trade, which we went deep on this last night. A gambly trade that even if you win, 30 seconds later, once that drug, the dopamine, wears off, you feel like shit again because you know in the back of your head that what you just did is not repeatable or sustainable. It's really interesting stuff. Come on, 45. All right, so by the way, this is no longer a single bar trading range, which means depending on how these bars develop, a small bull body pulling back inside after maybe kind of a smaller bear body or a doji. Similar to how 39.40 and then if 41 was a small bull body, closing just above the wick high of 40. You know, all of a sudden, that's something reasonable. That's something very reasonable because it's no longer a single bar trading range and we actually have some kind of information to work with. But at the same time, you got to be watching, you know, 46, 47. Does this thing break through 25, continue deeper into the 24s, and give you a RAM continuation setup? Got to keep that in mind as well. There you go, 46. All right, we're about halfway through bar 46 here. Let's see if the bears can take this down through. And you cannot start conveniently forgetting the context here is trading range. So it's really got to convince me if I'm going to get short. Really got to convince me. Question here, if bar 46 closes as a clean bear body, but doesn't go below bar 40, would I take it short? No. No, because it's still inside of the range. For me to bet on a range breakout, because remember guys, 80% of range breakout attempts are going to fail on average. That's an approximate number. Okay, 80%. Those are the kind of trades that will eat up the good without you realizing it. So no, I gotta be convinced. 30 seconds here. All right, 47. Let's see if you can beat one. Now, if 47 did break down through and close, you know, like down here, is that the early trade? Yeah, it is. It is. But I would take it the deeper, and the probability of me getting short on the close of 47 goes up as we close deeper and deeper and deeper beneath the wick low of 31 until we get to a tipping point of the bar being outsized. So let's see here what the Bears got. Probably not much, Bears. All right, now 47 is kind of what we were just talking about previously, right? You get a pull in here, small bear body. Now 47 can close as a reasonable bull body. That risk is pretty small. But it's got to close. It can't close way the hell up here because that's too deep back into the range. The math no longer really makes sense. So let's see if 47 can put that together. We are 314 out. There you go, Bulls. Gonna need them to hold that for 2 minutes, man. 240, that's an eternity. We got a question here. They say, Nico, on a funded 50K account, what do you recommend max risk dollar-wise per trade? I had 2 past accounts with payouts and lost both this month by oversizing. So I typically say in a 50K funded, your size is going to probably live somewhere between 2 and 5 micros, depending on volatility. But as far as dollar amount risk per trade, it's going to vary, of course, a little bit here and there. It's never going to be perfect. But you shouldn't be risking, you know, $100 on one trade and then $1,600 on another. Especially since they're not, you know, you're definitely not going to have that much of an increase in potential edge to do that. That's called exponential bet sizing, and that is an advanced technique typically reserved for personal accounts. It makes mathematical sense to do that, but not with prop. Not with prop. So usually your dollar amount risk per trade in a 50K is going to end up being 10% or less on average of the $2,500 drawdown. So, you know, it's probably going to live somewhere between 150 and 250 on the dollar amount risk per trade per 50K funded account. And it's going to vary, but it shouldn't vary by multiple factors of X. And going smaller than that, by the way, is not the wrong answer at all. All right, 45 seconds out. Let's see what we get here. Well, I better go ahead and pop on over here to the execution screen. 25 seconds out. Copy trader engaged. Now, if I end up taking this would be a range scalp. So a limit order or a stop limit buy would be acceptable. Let's see what we close up here. Got to close above the wick high of 46. That's reasonable. I will get along with a limit. Go ahead and set my risk management stop. Pull that up. Get that up out of the way. All right. See if the bulls can take that back into the range, man. ATR 37. All right, bulls, what you got? Stop is 1 point beneath the wick low of 31. All right, bulls. Let's do it to him, baby. Take it back up into that trading range. New bar here. There's the open of 49. Tested 25K, by the way. But we've been hovering around 25K for a minute, man. So I'm not really thinking about that. Even though it is an S-tier level, I gotta tell you, I'm really not thinking about it too much right now. It's all news today. Come on, Bulls! Alright, Bears. You got the wick low of 31 in you. Let's see. Let's see. They can take that wick low of 31 out. That would actually be good news. Maybe we could return to a soft bear channel. But damn it. Let's win this trade first. All right. Big bar 50. What do you got, 5-0? ATR starting to fall, by the way. We're down to the 33s. About 34. You're on the ATR coming in. All right, Bulls. It's not too bad, man. Let's keep that pushing. All right, there it is. Cut it. Let's move on. All right, so the bears took out the wick low of 31. Now I gotta watch 51. Because if the bears can actually put something together, that's a good thing. All right. Come on, bears, take this thing through, man. Good. 4.5 minutes. Come on, bears, hold it together here. We are 3 minutes, 10 seconds out. If the bears can close this, it's got to be clean. It's got to be clean. Then I've got a big gift for them. Come on, bears. We got 2 minutes to make it happen here. Clean this up. There you go, bears. Take this thing lower. 55 seconds. Now again, if the bears can close this nice and clean, I am looking to get short using a stop limit sell order. Let's see if we can get that. All right. 20 seconds. Copy trader engaged. Come on, bears, hold it together. Take it lower. Take it lower. I'm going to get the order ready just in case. Nothing. Nothing. All right, no trade on 51. All right, guys, hey, I'll tell you what. It's time for me to hit lunch, man. It's getting late. I gotta go get that in. Let's see what the afternoon brings. Again, reminder, I am in the middle of renovations here in the office. I'm surrounded by stuff. So I will be back on a very normal, typical streaming schedule very soon. Until that happens, you know, I'll be live when I'm live, man, just to tell you the truth. But we will get back to a very regular, consistent schedule once these updates, renovations are finished. I will catch you guys tomorrow morning. Subscribe to the channel so you know when I'm live. It probably shouldn't be any more than a week. I'll say this, under promise, over deliver. It should not be more than 2 weeks until the consistent streaming schedule is locked in and all this is finished. All right, guys? All right, I'm off to lunch. See you guys in the morning.